Welcome to Bears in Exile. Today is September 4th, and this is an update to Vegas Baby. Looking at Boyd, MGM, LVS, and WYNN. Alright, well, we last touched on this a week ago, and we said that Boyd was the weakest, MGM was also weak, and then LVS and WYNN were looking good. So let's see how that turned out and what we're looking at going forward. If you watch the nightly market overview, you know that we were looking for a bar retest and failure and in the overall market, which we did get, and the casino stocks are following suit. Well, here we are with Boyd. This is where we made that video last week. We said that we were getting some crossover in the short-term moving averages, and the middle Bollinger Band was in the middle, and we were looking for a test and a failure, or a test and breakthrough. We wanted to see the short-term moving averages get a complete crossover and separation prior to entering the bar, and that if we would not, we would have some problems. Well, that's exactly what happened. Came up for a retest of the bar, did not penetrate into it, did not get complete crossover in the short-term moving average, did not get separation, and it failed. Notice the CCI ticking down, both the stochastics ticking down. 14-day RSI moving average still in oversold area, not good. Down tick on the RSI itself, down tick on the MACD histogram, and a slight uptick in the MACD. Well, what can we tell from this beyond these things? Well, we can see that from the bar retest, it did exceed the upper price consensus level, but it closed below it. And then it broke below the major price consensus level, closed below it, resting right on it. And now we have ended with the spinning top as the short-term moving averages are rolling over and pointing down. Not a good sign. We do have another price consensus level here at just below 530. Okay, well, what else can we see from this? I'm going to go through price potentials tonight. If we look at black box number 1, we can see that it tested and failed off of the minor trend. Since it broke off of that, we can assume that it should test the lower band of the minor trend, which is also coincides with the extreme trend at 450. Now if we were to turn around and just go up, certainly we have the minor trend and the major trend just below $7, and if things were to get really bad, our lowest figure down here currently is just shy of 420. Now we have both of the stochastics rolling over, so we know that we have room to move on the downside, and so therefore we know that this target down here at 450 is entirely possible. It would break the current floor just below $5, and that would probably start some selling on its own. So 450 completely doable as long as the market continues to go down, which seems likely. We had talked about the price consensus levels a moment ago, and here we are. Now we know that this is weak because of the bearish bar, which is completely formed and very strong because of the short-term moving averages rolling over and pointing down. But beyond that, what do we have to catch this? Well, we know that the major price consensus levels are above it. We have some forming right now, but it would be much better if these were below to indicate some buying pressure at these lower prices, and they just are not there. So if we were to rally, we actually have these to break through, because we have all these people that bought up here at these levels that don't like this, and once it gets back up here, once they start to break even, some of them are going to be selling. So not good. Going on to MGM. Same thing, but weaker. We have the major price consensus level right up here just below 12. We have the upper price consensus level here just above 12. And we have the lower price consensus level here in the 9s. Well, we did the video back here on this day, and its closing price was, from the previous Friday, was 10.28. It finished off the week at 10.32, a change of 4 cents to the positive. Very poor showing, very poor. It did not reach the bar. The real candles did not reach the bar, and did not reach the price consensus levels. And the short-term moving averages, of course, rolling over, pointing down, along with the CCI, both the stochastics. 14-day RSI moving average still in oversold territory. RSI ticking down, MACD histogram ticking down, and MACD itself actually a slight side tick. Very weak, very poor, ugly chart. Beyond that, price potentials. You can see that we exited the minor trend and the major trend and have now turned around and are going down. If we are going to test the lower bounds of these trends, you can see that we have the minor at 9.30, the extreme at 9.47, and the major way down here at just above 8.40. Now let's say that something happens, we get a good NDE, everything turns around. Really, from price trend wise, we have the 200-day moving average up here at 1370, and the extreme trend just above 1450. But given the movement of the stochastics and the MACD histogram and the RSI, it is unlikely. And if we look at our price consensus levels, once again we do have developing ones here. It is resting currently on the major price trend. I'm sorry, the major price consensus level, not the price trend. So if it were to chop around here, that would be fine, that would make sense, that's where people are buying currently, but the secondary indicators do not suggest that that will be the case. Certainly the previous price consensus levels are way north from here, and just like Boyd, if we were to rally up, we have all these people that bought at these levels, which will be looking to get out. So not a good situation. And LVS, we talked about LVS being extremely strong. It has great positioning in Asia, especially with Singapore. And what did we get out of this one? Well, it was in the high 43s when we made the last video. It closed this week out at 45.10. And if you were playing this and had set your stops, it almost got to 48. So a good 5-point move, or just shy of that, could have been captured. And certainly if you were still holding through the week, you still have a gain of you know, $1.20 or so, which isn't bad. Now, what about this chart? Well, we have the long-term moving averages in a flat line trying to establish itself as a bullish bar. We have the middle Bollinger Band line below the short-term moving averages. We have a spinning top type formation on Friday. And notice the secondaries are all clicking down, which the entire market is clicking down. So we are just below the upper price consensus level right now. We have the major price consensus level in the 42s. And if things go really bad, we have the lower price consensus level in the high 39s. So, and in the formation of the short-term moving averages, you can see that we came through the flatline bar, and we've looped over. And should we jump off the forming bullish bar, that is a textbook guppy entry. Now the secondaries do suggest movement to the downside, but this stock is doing very strong, and this will not be a bad looking chart until it breaks through the forming long-term moving average bar that is forming. So not a bad looking chart, miles ahead of Boyd and MGM. Now if we look at our price potentials, this is an entirely different beast, because we have the price trends sloping up, not sloping down. You can see that we came up, we have not touched the minor, the extreme, or the major, and we have the 200-day moving average just below us. Good sign. So if things were to go poorly, if the secondaries are leading us towards a big move down in the market, we have the lower of the minor trend right at 41.50. We have the extreme trend about 40.50, and we have the major trend at 39.50. Well, what if we jump off of the bar and go up? Well, we have the extreme here at 48. Kind of curious that it is sloping down. The top of it is. We have the minor and the major converging, it would seem, at 52. So a good distance to go up if it shows some strength, if it's able to overcome the secondaries going lower for a little while, and then get its footing and start to climb again. 48 and 52. Not too shabby, if you ask me. And then we have totally different beast when it comes to price consensus levels. Notice these are not above the current price. We have major buying just below this, which it actually bounced off of on Friday, and we have a major level just below that in the 43s, and another level of that in the 39s. So there is plenty of interest to catch this as it goes down. That is a very good sign. Now if all of these were above it, that would be a problem, but that is not the case. And moving on to our last one, WYNN, the king of casinos. And actually we're going to see that LVS is, for the moment, a bit stronger than WYNN. We made our last video right here. It was at 41s. WYNN is high as 155, and it ended the week at 147.90. So on a week-to-week basis, WYNN did have the best move. If you're using stops, you could have captured a 14-point move roundabout, and if you're holding through the week, you still had 7 points roundabout. So not bad at all. I mean, that eclipses LVS, but we can see that the long-term moving averages are still a flat line. It is not trying to establish itself with a bullish bar at the moment. We ended with a hammer. The middle Bollinger Band line is below the short-term moving averages. Secondaries are identical to everything else out there, which is ticking down. Notice the forcing DRSI moving average is outside of oversold, which is a good sign, unlike Boyd and MGM. And if we look at our price potentials, we can see that it did get outside of the minor trend, went back inside of it. If things were to go bad, the lower price, minor price trend is down here at 38, and the extreme is just below 35, and the major is down here at, what is that, 127. But if it is able to get caught and move up, we have the extreme above 190, which would be really nice. Now, LVS is a little bit of a better looking chart at the moment, but that's okay. And and the minor trend is here at just shy of 152. Now, if we look at our price consensus levels, we can see that it moved up and bounced off of the major price consensus level for the previous month and backed off of it. And this is what we were talking about with LVS, WYNN, and Boyd, which is when you have a price consensus level above, people get freaked out, and when it gets back to them where they can, break even, they can get out. So unfortunately, this is there, and it is a bit of resistance that would need to be overcome. Both here, just shy of the 160 area, actually like 157 roundabout, and then above here, just above 165. So a couple areas to be aware of. But conversely, we can also see that we have plenty of buying areas below us that can catch what it's doing right now. Secondaries do indicate that it will have pressure to go lower, but there is some areas that can catch it. We can see that the major area from a couple months ago caught it on Friday, and way back here, when it was at its lows a couple weeks ago, it was able to fight to stay above this one. So although it's not perfect, certainly the lowest area, the low price consensus level, except for one day, it managed to close above it the entire time. So there it is. Excuse me, I have a frog in my throat all of a sudden. And so the call on MGM and Boyd, I think, was correct. The call on LVS and WYNN was correct. So I would look for some continued weakness as the secondaries go down to their oversold area, and then hopefully look for a bounce back up to challenge either new highs or price consensus levels that at that time will be above them. And we will continue to touch base with Vegas Baby, and good luck to all the casino players. As always, this chart and video are for entertainment and educational purposes only, and all investing decisions are your own. Thank you very much.